Welcome everyone to the webinar today. That is with Mr. Gabriel Ryan, who is a VP at DBS Bank Singapore, has extensive experience in the risk management domain.
Like where inflation is going or what's happening in the markets, you can, spend like 5 minutes. It will help. Risk management continues on a day-to-day basis, and it's still prominent within the management level. People like C-suites, like even the CEO.
Send the link. I think we can get started now since we've been all here for some time now. So welcome everyone to the webinar today. That is with Mr. Gabriel Ryan, who is a VP at DBS Bank Singapore, has extensive experience in the risk management domain, and he has, today done us a huge favor by granting us his presence here to share all the insights from the industry for all of us. And as we proceed through the seminar, we'll be discussing some key topics, but we'll also take some questions in the chats, and as Gabriel seems fit. So yeah, I think we can get started. Hello.
Hello, hi.
Hi.
Are we still waiting on more participants?
Yes, I think people are still joining, but should we wait for some more time, or if the people who have already joined, we can get started with the basics and others can join on the go? What do you suggest?
I'm open, but I suppose those who have joined for a good 10 minutes or so might not
Yeah,
be too good to keep everyone else waiting. Yeah.
yeah, yeah. Let's get started. I guess we'll get started, and those who want to join, they can just join during the presentation, and if there are more questions, we can discuss later.
Yep, sure.
So, first of all, Gabriel, I would like to thank you again for joining today. It is really great to have you in this webinar with us. And we wanted to, address the key some key discussion topics like there are two kinds of, kind of queries that we get. One is from the aspirants, and the other from the people who have already started their career in the risk management domain. However, they are looking for the right pathway to grow in their career.
Right.
Right. Then there is another discussion around the utilization of certifications on the job. What kind of certification is better than the other given someone's profile, and what's in store in the future? Like we see a lot of stuff going on in the AI in risk management, be it credit risk, liquidity risk. So with that, I would just like to understand from you what inspired you to get into the risk management domain, and how has been your journey so far?
Right. I think that's a good question. I suppose at the very top, every individual's experience is probably unique. So in my case, my personal experience was how I landed in risk is, I guess, when I was still studying. Probably in my second year of studies was when Lehman Brothers collapsed, right? So that I think, as we all know, it set off a very painful chain reaction that was the 2008, 2009 global financial crisis. But I guess what it meant for me as a student, and I guess for a lot of students back then, was that news was always bad. There was always news on financial markets. So I guess that sort of intrigue both myself and many other students alike. What's happening, why is everything going south, uh, from a financial markets the point of view. Everything else was collapsing around us, so that sort of set the scene for a interest within this broad domain of risk management, right? So I guess that was like the initial inspiration. So I was always reading the news. There was a lot of conflicting news. I would say back then it was like, uh, was it cyclical?
Thank you so much for answering. Actually, there are some questions asked by Anubhav Jain and Abhinav Chaudhary as well.
Yep.
Can you please answer them?
So guys, by the way, I am back. There was a
Hello.
technical glitch. My bad.
Hi, welcome,
No problem.
Ripul. We were just getting started with
Yeah,
the
please go ahead,
questions
Amir. Please
our
go ahead.
participants have asked.
No problem. Okay, let me have a look. So there's a few questions. Okay, the first question, second last question is FRM sufficient on a standalone basis to get into risk? Okay, so this is a good question, probably of interest to many FRM takers. I would say that when we talk about the risk, the terminology risk, it's a very broad area, right? So the FRM, if we're talking about the syllabus, largely it is more catered towards financial markets. So we learn things about financial products. We learn about the quant methods, the basic quant methods, right? Financial products, risk measures like value of risk, expected shortfall. So these are highly relevant to say an investment bank or a bank that has a lot of trading activities, or and banks that deal with a lot of quant risk management. So on that note, I would say FRM gives a good foundation to be within the risk management space. But risk is really broad. We have financial risk, we have non-financial risk. Non-financial risk talks about everything else that is quant in a way. So what I mean by that is, say, technology risk management, cyber risk, along those lines, which are very prominent now and moving forward. So in those contexts, the core syllabus of FRM may be not directly applicable, but the thinking is applicable, right? When I say thinking, I mean the thought process of risk management, right? Identifying risk, trying to measure risk, and trying to see how big the problem is, when an adverse event takes place. So this thinking process is also embedded within the syllabus, and it can probably help on a very broad risk context. But if you're talking about the core FRM syllabus, probably more relevant for either the market activities, the financial markets, capital markets, or credit risk kind of roles. I hope that helps a little bit. The next question.
That's great. Actually, I think that really explains a deeper dive. If I guess if anyone from the audience has more questions on this further, please feel free to add the questions in the chat. We are all watching it. I have the next question here. If for now the audience questions are being taken care of, but we'll keep on seeing these questions too, and I'll try to make it easier for you, Gabriel, by picking a lump sum questions if two or three people are asking the same thing. Okay.
Yep. Sure.
So next question that I have, for you is, you have come so far in the field of risk management, and you've had experience of handling team, working in a team. Like in your experience, if someone wants to, do well in their career in terms of, be able to handle a team in the future, like what kind of skills or qualities I would say are most important in an individual to go to a leadership role? This is one question.
Right. I would say within the risk context, risk is really huge. Like I mentioned earlier, right? So if we're talking even within the financial financial services domain, we have vastly different areas of risk, like credit risk, market risk, liquidity risk, operational risk, right? So each of these areas are relatively distinct, and the qualities required in those areas are also relatively distinct in general, I would say. But however, I would say what is common is, from a big picture perspective, is that risk, like I mentioned earlier, is generally more a culture, right? A lot of people are talking about risk culture, right? So that can happen at an individual level, and it's also a mindset, right? So what I mean by that is, even in the individual work that we do, it would be good to see how the day-to-day operations of whether you are a credit risk person, market or operational risk person, how does it fit into the overall management of risk within the organization, right? Which at the very top, a bank or financial services company, insurance company, what they want is to be able to identify risk. They want to know how big the problem can be and how do they manage them, right? So if we take in the credit risk context, we do a lot of groundwork that are nitty gritty, building models. We have things like RWA, capital management. We have ratings, right? So we do all sorts of measurements, but what we're essentially doing is we are trying to measure the risk of the portfolio, how big the risk potentially is. If we take ratings, for example, right? If most of the corporate borrowers are rated AAA, for example, okay, that's good. We have onboarded good customers. If the average rating is, let's say, triple B, so that's not a good sign, right? So then how do management use this kind of information to adjust, to steer the company? So that that's probably like a middle management level. So once you reach top, I think it's more of a management and also ability to make difficult decisions. You will definitely come across a situation where, for example, if you're a credit approver and you need to approve a loan that is difficult, and you have to put your name as a credit risk manager. You are the approver. It can go all the way to the top C-level kind of process skills is required to make those difficult decisions.
Okay, great. I think that that is really really good to hear. How you are approaching this, and our audience, meanwhile, they are asking a lot of interesting questions, but one that particularly stands out here right now is someone is saying it seems like risk management only has a role whenever there is any financial crisis. And it seems like, banks, whenever there is a crisis, either the banks can collapse or they are bailed out. So the risk management primarily has a role when we enter a crisis. Is that true? What do you think about that? And do we have any cases where banks were saved after facing crisis due to strong risk management practice? I think there are many examples out there, but maybe Gabriel, what's your favorite one, and how would you like to answer this question?
Yeah, I like this question. I've written about this a few times, and I'll also probably continue to write about this. But I think uh, to audiences outside of risk, that sounds like something not too unrealistic, right? Where risk management becomes important when something bad happens, right? But I would say that is not necessarily true. So one analogy that I can give, which is also within the risk space, operational risk, but not within the financial risk context. So we think about building management, right? Like an architect and a engineering firm building a building. Where do you put the fire extinguishers? We On a day-to-day basis, for us as tenants, we don't really think about those fire extinguishers, right? Only when there's a fire, we start to hunt around. Okay, where are those fire extinguishers kept? But from a management perspective, the risk manager of the building, uh, where to the optimal place to put those fire extinguishers is really important, right? But for ordinary people, we don't really think about it. Yeah, so you can think about us as the guys, risk managers as the person finding the optimal place where you put those fire extinguishers. And what that translates to a risk context is how much risk appetite you have, what are the risk limits, what is the target capital ratio, internal capital ratio, all these kind of things. All these are safeguards that people, a broader audience outside this domain may not appreciate until something bad happens, right? So in terms of addressing the question whether or not risk becomes a focus when a crisis happens, um, it may be partially true in the context of risk becoming more focused. But outside of a crisis in normal times, risk management continues on a day-to-day basis and is still prominent within the management level. People like C-suites, like even the CEO, they would be concerned about risk management because if something goes wrong, um, it can trigger a crisis, right? So the problem is avoiding that situation. And if a crisis were to happen for any reason, how can you manage that, right? So that's where risk comes into play. I hope that sort of answers a little bit. May not be foolproof, but a little bit of context there.
Yeah, I think, that is that for to me that sounds really interesting. And we have more questions coming. So how about Gabriel, we take a question slightly towards the early career. See, once someone has a straightforward question, and I am keeping my questions on hold, since let's take the attendees' questions first.
Sure.
What technical skill set do you think, like in terms of which software, should beginners get hold of if they want to get into financial risk management? Like, this is someone
Mhm.
maybe who is still in college, or someone who has still just entered the workforce and trying to move to risk management. From a technical aspect, what do you think is most essential?
Right. I guess on a very broad basis, um, number one, I think one cannot escape Excel. Right. So if you're talking about software, whether you are a credit risk person, you are a market risk person, operational risk, I think some way or other, we all end up using Excel, right? So that's probably number one, which we cannot escape. And then secondly, I would say historically it has been like SaaS. So SaaS was very in demand for roles like credit risk, for example, right? But I think a lot of institutions have since started to embrace, more open source kind of softwares like Python. So I would say, if you have to choose, go for Python because you cannot go wrong with Python. But having said that, some domains within risk can be very specialized. So let's say you want to join an investment bank and you are working along the trading desk, building trading systems, right? So I've not been in those roles, but to my understanding, based on my research, is that a lot of trading systems, pricing models rely a lot on like C++, right? So if you are interested in like really hardcore quant work or working alongside like the quant traders building quant systems, C++, otherwise Python and Excel. Yeah.
Okay, so basically you are saying for the complex models and in quant, C++, which has existed long before, that is still in use and it's a good skill set to have.
Right. So when I say that, I mean you're talking about building trading systems, like you're building pricing models for exotic exotic products, structured products, exotic derivatives, so on. Like in my area, for example, in credit risks, we build credit models. They are all previously was in SAS, now it's all in Python. Yeah.
Understood. Okay. So I think it depends on the fundamental interest also on top of quant. So you can pick your pathway accordingly, whoever is starting out in risk management, if you want to go deep into quant. That's good to learn for me as well. So there is one question regarding mutual funds, and I know, Gabriel, you've also worked in insurance sector as well. So there is an interesting question. I never thought about this before. How do you see a career as a risk manager in an asset management company in mutual funds or fund management? Is that something like, do you think that's a major contributor to risk management domain that you would consider?
Yeah, I think definitely. I mean, I've not been in those roles, but I would imagine risk still plays a prominent role in the asset management. So I would say probably the like the syllabus of FRM, it is relevant for asset managers, right? So I guess what an asset manager would be interested from a risk context is let's say risk concentration. You don't want to be overly concentrated in a certain sector. What are those risk measures? What is the potential loss? Like what is the value at risk, expected shortfall? In those kind of sectors. And then if you're talking about fixed income as an asset manager, what are the sensitivities? What are the potential rating migrations that would cause substantial loss on your funds portfolio, for example, right? So yes, risk, I would imagine, plays a prominent role even within the asset management industry. So that is the financial risk. There's probably the non-financial risk side also within the asset management industry. Yeah.
Okay, so next question is a little bit about you, since we have discussed about upskilling and technical skills. in your career, what do you think has been the major upskilling or a networking opportunity that really took you to the next level? Or do you think that's like a gradual process? If there is anything that really stood out for you, learning any new programming language, or a new coursework, or maybe networking rightfully, if there is a
Right,
moment
right,
like this, that please share with us.
right, right. I think there are quite a few. I guess I've had a interesting path. I guess number one is uh, moving domains. In a sense, so as you noted earlier, I started in the insurance business, um, and then I moved to banking. So making that switch, I guess maybe the word upskilling wasn't so like a big buzzword 10 years ago, but I was always curious. So even though I was in a different industry, I kept reading. Whenever I make connections or contacts within the banking sector, I would always, try to, find out through conversation, what do they do casually. So that gave me a little bit of knowledge in a broader area, right? So when the opportunity came to move to the banking space, I can say that I know a bit, right? Instead of saying I don't know anything, and please take a chance on me, right? So I was able to convince the banking guys that okay, I don't know that much, but I know a little bit, and I can definitely build on there. So that happened a long time ago, maybe 12 years ago, right? But from upskilling perspective, I would say be curious. Don't focus on one particular domain. You can always have a broad picture across multiple domains. That'll definitely help when you move up because you need to see the bigger picture. But to your other question, the upskilling in today's sense, I would say is probably starting early to pick up things like R and Python. I started way early out of interest, you know. Uh, Back when SAS was still the dominant language, I was googling and studying through YouTube, the R programming language and the Python language. This was what 2015 and 16, where it was still in the uptrend, but within banks, it's not as widespread as it is today, right? When opportunities came, I can say that I know a bit, right? Rather than saying that I can learn on the job. So uh, what this means is that again, we always have to be curious, to pick up a little bit. I'm not. I would say I'm not that hardcore. I go and master everything, but I just know a little bit, right? Just enough to survive. And then if opportunity comes, then you can take it, and then from there you build on. Yeah.
Okay. So, that's really great to hear. And along the same lines, there is one question from the audience and one from my side to add on. Just going in the direction of, don't restrict yourself. So, how do you feel about, let's say, other fields in finance outside of risk? That is a question from the audience, from one of our community members. And on top of that, I have one question. Maybe no one else will ask it, but for example, if you want to make a lot of money in risk management domain, which specific subdomain usually gets the most high paying jobs? I am asking this because I know no one else will, but maybe someone has a background, someone has that in their mind. Everyone has a goal, right? In when anyone picks their career out of interest, also there are personal goals also. So just want to understand your perspective on that on a broad scale.
Right, right. I don't know if there's a perfect answer to your last question. Um, but one thing that I can say is that eventually we will get there, lah, right? It's just a matter of opportunity and how fast do we get there, right? Uh, what I mean is, let's say a target level is I don't know, VP or senior VP somewhere. You can either get there really quickly, like within 10 years, or takes you 20 years to reach there, right? I guess a generation before us, Gen X, for example, uh, taking 20 years to reach that level is very normal, right? But as we move up the generation ladder, we want things a bit faster, right? So it's not uncommon to see people get into senior VP roles within 10 years. So I guess that's the question, uh, right? So there's no right or wrong answer. Whether you're a senior VP in operational risk or market risk, credit risk, more or less the same, lah, right? All right. So this is then next comes the question is which area probably gives more opportunities. I think that's a really difficult question, but one thing that I can say is probably an area which is within the risk context. If there are regulatory pressures, there are definitely opportunities, lah, right? So for example, back in 2010, for example, those folks who enter into the Basel kind of roles, I guess they progress faster because there were a lot of regulatory pressures, and if you can meet deadlines, the compliance deadlines without tools, you will get a lot of visibility from the top. Then you tend to progress faster. And then same thing came when in the credit risk context, when IFRS 9 came out. So IFRS 9, it was a big, massive change for a lot of banks when it first, when the draft first came out, probably 2015. Also, so a lot of banks, embark on big projects, and for those on the projects likely would gain more visibility. So in a nutshell, if there are regulatory pressures to do something, it's an opportunity. But outside of regulatory um, kind of roles, probably a role that deals with a lot of money, like market risk or trading kind of risk managers, you can probably make some in those kind of roles.
Okay, understood. Yeah, really thanks for all that insight.
Yeah.
Definitely I learned from that, because this is one question I had, and I'm sure many others would have, but maybe they won't ask in a professional setting,
perhaps
tell them to ask. So I thought I should ask.
Sure. I guess on this note, maybe another, you may not make as much, but perhaps in a role like consultancy, right? So you tend to progress faster, but it's very stressful, right? Survive. So there's a survivorship bias. So if you survive the life in consultancy, you likely would progress the more senior roles relatively more quicker than in a big organization like a bank. Yeah.
Understood. So there is one very specific question, and I guess this goes around the fact that many people, try to understand how to switch between, middle office, back office, and front office kind of roles. So one person is asking that, someone who has an experience in corporate treasury side, with a focus on cash and liquidity management, in middle office corporate functions, treasury. Now, if this person wants to, let's say, get into the hot jobs in risk management in big fours, GSIBs, is there any additional skill set needed, or it's a matter of time about getting the right opportunity, or that's a really difficult switch to have? What is your, like, a broad perspective on it? I know this is a very specific question, but gives us some kind of idea to everyone in the audience who are thinking about making this kind of a switch, as and when they find that risk management is actually an interesting domain and we want to work in the core part.
Right. So I understood the question as, if you're working in like a middle office kind of role and you want to switch to, let's say, a consultancy kind of role. Was clarified.
Hello.
Hello.
I couldn't hear you for like 10 seconds. I don't know about everyone else.
Am I audible now?
Yes.
Okay. No. Yep. So I was clarify. I was
Guys, can you hear me?
Yes, we can hear you.
Okay. Cool. So when it comes to hot kind of roles, it's always good to keep up with what's happening in the market, and see if there are any opportunities to break into those, and at the same time upskilling, right? And then the other context is whether or not our own specific area, like I believe the question was, if someone was in corporate treasury, dealing uh, with cash and money market, for example. Yep. So the other context is, if there are new regulatory guidelines that deals with those kind of areas, so that would make the job a bit more hot, and I'm sure consultancies would have lots of projects. So coming back to consultancy, right? Normally, how consulting firms hire is based on project needs. So anytime they get big projects and suddenly they realize they need more headcount than they have, then they start to hire. So it's really, there's also a chance element, right? So for those intending to apply to consultancy, there's no harm. You can always apply. I mean, if you don't see any openings on the website, it doesn't mean they're not hiring. If you know somebody within the consulting firm, you can always ask if they're hiring. There might be a chance that there's an opening for any kind of roles, right? Because the consultancy firms, they take on all sorts of projects. It can be credit risk, it can be market risk, operational risk, or non-financial risk kind of roles, right? So there's always no harm in, if you know someone within the firms, you can approach them.
Understood. So I think we are running out of time too, and I know it's Saturday night. I don't want to hold Gabriel for too long too, and I'm sure everyone might have plans. But I guess last and overall kind of question is around the certifications, and this is something that I also want to really learn. there are many certifications like FRM, CQF, then CFA also. And do you think uh, how do you decide like which certification to get? Like someone is asking in the audience, should I get a CQF or not, or do an MBA? What is the real value of certifications as per you? If you are already on the job, you might as well go on to upgrading yourself by learning on the job, like a market risk, I would say, specific kind of upskilling. Who is, like, what is the real value of certifications, and how to decide which one to pick is my question with all that background.
Right, right. I guess in terms of which one to pick, let me see if I can provide some views. So I guess one way to look at it is which certification is more widespread, right? So for example, if you compare CFA and FRM, for example, right? So CFA is, I would say, more widespread, as in more people are familiar with the name CFA, even those outside of the banking kind of domains. A CFA charter holder may work in any kind of finance roles, even in a non-bank. So the audience is definitely wider. And that when the audience is wider, it's probably more recognized, right? So FRM uh, is probably the most recognized, but that's my view. I don't know if some other risk managers would share the same view. But it's just knowing the name. If somebody hears FRM, so there is another body that gives the certification, PRM, professional risk manager. So I've heard of it, but I know a lot of people have not heard of PRM, even though it exists, right? Uh, People are more familiar with FRM simply because they're and people know it probably because the marketing is better. CFA's marketing is really good. The GAB's marketing for FRM is not. So the other bodies, it really depends on their marketing, right? So in terms of the widespread, that's probably a factor when it comes to the exams. And then the other thing to consider is probably the syllabus, what it would cover. So if you compare like CQF, for example, I would say it's probably a lot more technical than FRM. FRM is a bit more broad-based. The idea is to cover breadth rather than the depth, right? Vertical. So you cover more breadth. So it's a bit more all-rounder. So that is probably a consideration also. And then last but not least is also the exam fees. Yeah. Yeah. But having said that, I would say nothing replaces practical experience. So as we discussed, in the last 1 hour, there are a lot of skills that are required for risk managing, including technical skills. These kind of exams are just online based exams, multiple choice questions. You don't learn, even though you learn a little bit of, let's say you learn a bit of statistics in the FRM or CQF, but you don't know how to implement those in Python or C++, or SAS. It will not get you very far, right? Just the exams alone. Practical skills have a lot more weight than exams. Exams is supplementary, good to have, and it's probably more good to have if you need to sell something. For example, if you're a consultant, you work in the big 4 KPMG, you need to sell your staff. So having certs is good, right? But if you're working in a bank, it's definitely good to have, but not mandatory.
I think that's a really, really, really keen insight. Thank you. I was thinking that, but yeah, I think I also agree from what all I have learned. So, Gabriel, I would, leave this the ending part open to you now. Anything else you would like to share? This has already been such a great session, and everyone is really thankful and getting the DMs and also in the Q&A. People are really, really glad that you have shared such enriching insights. It's really, it's rare. It's rare to find a nice, deep dive into the industry with realistic information, and we really thank you for that. Those are all the questions I had. Is there anything else you would like to share that about risk management that you have liked the most, since you have continued a career in this and are actively writing about a great content about it? So I'll just leave it up to you for the closing. Anything else? Hello.
Hello, am I audible?
Yes, now you are. Just now,
Okay.
like 1 second ago.
Okay, sorry. Yeah, I disconnected. Yeah. Okay. Yep. Thank you so much. Also, for having me and the opportunity to share a little bit lah. Yeah, I would say I'm not a expert. I just have a little bit of experience here and there. And I guess with those small experiences, I can share a little bit lah.
Yeah, please. Is there anything else you would like to share? Otherwise, we can close. And if anyone then wants to connect with you, if anyone asks me, we can discuss if anyone needs any further personalized advice anytime else. If you have time, we can discuss that later.
Also, keep up with financial news. I don't really read like every news in details, but just the headlines. Like where inflation is going or what's happening in the markets. You can spend like 5 minutes. It will help shape. Uh, okay, I think
Okay.
that's good for me. Yeah.
Yeah. So thanks again. And thanks for the attendees also. And I think Saturday's highlight for me, this was the most interesting part of my day, and I really enjoyed the last 1 hour and taking all the questions, and then taking the feedback from Gabriel. Thanks, Ame. So Ame is in my team. He works directly with me in the founder's office, and really works hard. So he's also here as a co-host, and I can see there are many people who have been actively engaging in our communities and all. So yeah, really, really great session. If anyone has any further questions or anything, DMs are open on the
Yep.
WhatsApp.
Yep.
But Gabriel, the biggest thanks is to you for sparing the time. You are the reason this seminar happened. So thank you so much.
No problem. No problem. Happy to be here to share a little bit and have this chat. And I see a lot of interesting questions. Unfortunately, we may not be able to go through. But I write a lot of stuff on LinkedIn. I see somebody commented, I write a lot of BS. Yeah, so I'll see if I can, write something on some of these questions. If some of you, my audience as well. Okay, thank you
So
much.
great. I'll record all these questions and I'll share with you as well, and
Yeah.
then we can see how
Yeah.
it goes. Yeah.
Yeah, sure. Sounds good. Yeah.
Okay.
All right.
Bye,
Thank you.
everyone.
Thank you.
Thanks
Bye-bye.
again for joining,
Yeah.
and
Okay.
looking forward to interacting more on other platforms.
Thank you. See you. Bye.